Good morning, everybody. Welcome, welcome. Let everybody come in. Good morning. Hope everybody's having a great morning. We'll get started in about 2 minutes. Good morning. If you are joining us on X or YouTube, go ahead and hit that like and subscribe button. Good morning, Zapero. And you'll be notified when we go live with content, as well as post any pre-market content. Good morning. Or any updates throughout the day, or if we go live in the middle of the day with a midday recap or post-market recap. So, as always, check out our extensive posting here pre-market after the CPI print. Posted some of the structure. There's an echo. Okay. Test. Well, let's see. Maybe it is. Let me close all this up. Okay. Hopefully that takes care of it. You may have on your side. You may have two. You may have two things open. You may have X and YouTube open at the same time. That could. Okay. Good. Yeah, Butch. Okay. Yeah, you may have X and YouTube open. I've actually done that before, and they're like a few seconds off. So that may be what you're hearing. So, okay. Thanks everybody for joining us. Let's go ahead and jump right into it. I'm Michael, coming to you from Gamma Edge on Thursday, December 18th with our pre-market prep session. Thanks everybody for joining us. If you're new, again, like and subscribe on X and YouTube, and you'll be notified when our content goes live. So what we cover here on our pre-market prep was we cover our three pillars that are essential to Game Edge: sentiment, structure, and trend. As we will cover individual equities at the end, also from people that are joining us. So you can throw those tickers in the voice chat or on X, and we'll get to those at the end. So let's go ahead and jump right into it. Our market trend model based on the tick index. As always, our bolded white line is our intraday instantaneous CT. This is for 0DT or intraday traders. You can see it's been significantly weak for the past few days. Really back from December 12th when we lost these shorter term momentum moving averages, or what we call the railroad tracks. This is your 1 to 3 day swing period. When the CT gets under those, you want to be a little bit more risk off, taking capital off the table or looking to short the overall market. I'll draw your attention up here to our breadth indicator, new highs versus new lows. New highs were outpacing new lows, but it compressed significantly post FOMC meeting. And then we were barely outpacing for 2 days. And then finally, the new lows took over as breadth continued to deteriorate. Obviously, as you've seen in the overall market, and yesterday, new lows were still outpacing new highs. This center pane here, or this second pane down, is really the most important. This is our filtered cumulative tick indicator. This is plus 1,000, minus 1,000 larger block orders. These are institutions and whether they're selling or buying the overall market. And we started to see significant selling come in on the 12th, and then that continued for multiple days. And obviously the SPX responded with the move to the downside. So all of these together forms kind of a mosaic for us. If we see institutional filtered cumulative tick selling, we see new highs really not outpacing new lows. And then the overall CT, the bolded white line, and the railroad track moving averages moving to the downside, then that's an indication for us for risk off and looking to short the overall market. Now, the colored ribbons are a longer look back period. Again, the red is still above the cyan, but once the bolded white CT starts cutting into the colored ribbon, this turns our mechanical portfolios off. So we stop entering long positions, and this really protected us from the overall significant downside yesterday. And really the previous days, we started cutting the colored ribbon on the 15th, and our mechanical portfolio was turned off and we did not enter long positions. So really, again, saved us from experiencing the overall downside capital. And now we'll look for this bolded white line to start turning back up above shorter term moving averages and emerge above the colored ribbon to tell us that we can start putting more capital to work in the overall market. All right, we'll go ahead and look at our TradingView MTM indicator that we released this week. We're getting great feedback from everyone, members alike. Intraday trading really has been phenomenal with this market trend model. You can see, sorry, that's the MU ticker there. Forgot to grab the new one. Sorry about that. Okay, let me grab the new one here. Pull this over. Yeah, so we've been sorry about that. Like I said, we've been getting significant feedback from members that this really has helped them intraday for the overall trading. Obviously, it's the same setup and scenario with our other market trend model indicators based on TradeStation. But you can see once we start moving to the downside, we actually have triggers, or I'm sorry, indicate or alarms or alerts. Sorry, once this TradingView start or the cumulative tick starts moving below the shorter term railroad track moving averages, we actually start getting alerts, and you can set those audio or visual. And that gives us an idea that the market is moving into an overall selling condition. And you can see what it really happened with the SPX. And our background is also coordinated with that selling condition. So you can see when you have a short-term move to the upside here, but we really didn't recover those shorter-term moving averages. And then we started turning back to the downside. So again, that was an indication to us that market participants were not buying on that short-term bounce to the upside. And then it provided us an opportunity again to short and capture the downside yesterday. So again, we continue to revise this, and members continue to use this intraday for 0DT trading and having great success. So come join us in Discord. Again, all the code is in there, and it's easy copy and paste to add an indicator to TradingView. All right, moving on, the SPX options complex, largest, most notional value. Again, SPXA and SPXP, we separate those. SPXA is your cruise ship or larger tankers heading into December expiry. We've now moved to a more put-dominated state. Obviously, this was pre-market where spot price was at 67.20. So we may recover some of this as we head into today. Top of transition, 67.90, Confluence 6,800. Remember that level as we head to full expiry, SPXP as well as 0DTE. So you just see this will be an overhead headwind at 6,800. And we're within the transition, again, extremely choppy, and we're now to put dominated for the institutions as we head into the expiry. So that is showing weakness in the overall structure coming in after yesterday's move to the downside. All right, moving on the SPXP, all expiries turned on. We are put dominated here. You'll notice that transition is here, 68.45, 68.50 to 67.65. We went all the way down to 67.20. So we were going to open well below that, but obviously with the CPI, we'll check where we're at now. We're at 67.80. So we're at close to the top or middle, sorry, of the transition area. So again, this would be defined as choppy, put dominated, more weak structure. So we'll give an edge to the bears here. And you see overhead that 6,800 is really going to be that area to try to overcome. But then we do have significant charm overhead as well as negative net deltas. These are in the money puts now on the full expiry options complex. So again, upside appreciation is going to be pretty much extremely difficult unless we see overall monetization or out of the money call speculation continue to come into the overall structure. All right, let's move on. The SPXP GEX ratio. This is like a put call ratio, but we add a gamma component, which is a time component. So this weights the short dated call gamma versus short dated put gamma much higher than what a put call ratio would. So again, below the one line, that means the bears are in control. We're in a put dominated structure. That means short dated put gamma is overriding the short dated call gamma. We did see a short blip to the upside coming into the overall today, but we're still below one. So again, put dominated structure, and bears are in overall control. And we discussed this previous few days that we were seeing the SPX go sideways, not an overall increase in the GEX ratio. Market participants were really just not positioning for the upside or the downside, but we did see a degradation in the out of the money call speculation. So this is most likely going to lead to more weakness in the overall structure. And then once the GEX ratio started moving to the downside, obviously short dated call speculation was coming in pretty significantly. So we're below one. So edge to the bears today, even if we do get an upside move towards 6,800, we're overall in still a more bearish structure. and a weakened structure. So we would have to recover significant points overhead and levels to get this to move back above 1, and then see a significant out of the money call speculation via our intraday vol M tool and our intraday volumetrics tools. All right, moving on, the SPXP delta balance. Again, we separate the overall structure from a left-hand plane, which is below spot price, right-hand plane above spot price, and then the aggregate is the blue dotted line. So we'll quickly look at the left-hand plane. Again, these are your in-the-money calls below. This is heading in to today. We do see at that 0 point again, so that's really not indicating that that there's a bullish overall structure. And as you'll see with the web app, obviously we're put dominated. And then we talked about that right-hand plane continuing to drop all the way back from the 12th. So the out-of-the-money speculation was continuing to leave the overall complex. Upside spot price appreciation was going to be difficult because we did not have that out-of-the-money speculation. And that resolves one of two ways. Either you see spot price continue to go sideways, delta balance will improve, GEX ratio will improve with speculation to the upside. Me opening as a market participant, opening out of the money calls, my book gets longer, positive delta, dealer book gets shorter. They have to buy to hedge that overall mechanical opening. Or you'll see out of the money put speculation to the downside. My book gets more negative, dealer book gets more positive, and they have to sell. So what we were seeing is, as I talked about, that degradation of the out of the money speculation, and that resolved itself to the downside. So we were already in a cautionary stance with the market trend model, GEX ratio, as well as the delta balance. And we were basically just waiting to see that out of the money put speculation start to ramp up, which we saw yesterday with our intraday vol metrics tools. And we were able to capture a significant portion of the downside for most of our members. Again, we're looking at the overall structure for on out in time, further expiries. We see a slight improvement into the MOPEX or monthly OPEX into the 19th, but then we see more weakness coming in after monthly OPEX. So we'll see if this continues to evolve over the next few days. Does it improve or does it continue to weaken? You'll see the delta balance down here towards the 22nd and into Christmas Eve is railed at -1. So that is indicating weakness in the overall structure on out in time. So we may see a short-term relief bounce today. And if the structure does not improve, we do not see an improvement in the out of the money call speculation via the delta balance, via the GEX ratio and our market trend model, then we would still be leaning more cautionary. And that's how we look at all of our pillars, sentiment, structure, and trend, to make an informed decision, not an opinionated overall trading plan, but an informed decision with data backing and data proven of how we're going to navigate the SPX option structure. Opinions we throw out, we look at data, and then we position ourselves with how the option structure is telling us and market participants are participating in the overall market. So this was our first SPX run this morning at 67.51. This was before CPI. This is our net stack command. This provides our highest sensitivity levels for the day. You'll see that we were put dominated. We have some in the money calls below us at 67.15. Sorry, in the money calls put dominated overhead via 6,800. So I'll show you how this can we can update this pre-market, and we'll actually give you different sensitivity points as spot price appreciates and depreciates pre-market. So this was a 67.50, or we forced this at 67.51. So you see where the significant amount of charm was, as well as the gamut, as well as the net vanna. We were in the money put dominated overhead. 6,800 was going to be difficult to overcome. So then CPI came. We forced spot price at 67.79. You see you have in the money calls. This turned to green, 67.25 below us. So those would be supportive if we move down towards that level. But you also see 68.50 overhead in the money puts, as well as a large charm headwind at 6,800. So as long as we're below 6,800 for the day, these out of the money calls will continue to decay. It will be very difficult to move up above, again, unless we see that out of the money call speculation override the charm. Again, we'd have to see a large amount of those out of the money calls coming in via our intraday volumetric tools. And then we see gamma 6,800, and then vanna. We do have the opportunity for a vanna rally if we see us move above 6,800. We see volatility drop, which would be VIX dropping, and then we see out of the money calls coming in. You have to have those two components and spot price moving above 6,800 to grab that tailwind. So obviously we grab the tailwind of charm. This would flip to more supportive if we get above 6,800, as well as vanna 6,800, and then we'd have to overcome those in the money puts, obviously all the way up at 68.50. So we'll watch this evolve here pre-market. We're just testing the 67.85 and 0DT transition already. So again, we'd have to move above that 6,800 to really have a significant tailwind and move into a more supportive overall structure that we would be a little bit more bullish on and favorable for upside appreciation. Excuse me. All right, let's move on. The SPXP 0DTE. Sorry about that. So heading into the XPX 0DT, we are put dominated for today, as we already discussed. Those overhead puts, in the money puts, easily to see and define via this net delta. We pushed out a update to our web app last night that provides the numbers to be offset from the bars. So that gives you a little bit better visual if you're a numerical person or a visual person via the bars. So you'll see that to the upside, 68.70 or 67.80, 67.85 is that key transition level. And we have bottom or the top of DS at 67.90 and then 6,800. You can see, excuse me, sorry about that. You can see 6,800 overhead is still going to provide a significant charm headwind as we move into those overhead levels. And then we can enable our net OI command or a net OI columns, and you'll be able to see slice over slice what we'll need to see in the vol-m command and the amount of transactions or the amount of call transactions we would need to see to overcome these net deltas as well as the call OI to have a significant move to the upside. So if you click on the settings tab over here, it will allow you to enable whichever columns you want, and then you can slide these columns however you wish. I just do not have the call OI column and put OI column enabled at the moment, but again, all of these columns are can be enabled via the settings tab. If you're a member and did not know that, I know we had some questions about that. So for today, if we're in the transition area, extremely choppy back and forth between 67.50 and 67.80. If we get above transition, we'll be looking for a long towards 6,800. If we're below the transition level as well as drunken sailor range, which was a great opportunity yesterday to short the overall market for a move down towards 67.20 and then ultimately 6,700, we would most likely look for some monetization towards that level. And then we have index down towards 66.85. So that's our thesis for today and our trading plan. Again, transition choppy above, possible move towards 6,800, and then below transition as well as drunken sailor range, move down towards 67.20 and 6,700. Again, this will be all conducive on intraday volumetrics, speculation from market participants. We'll be watching our vol-m command, probably provide a few updates for today, as well as our market trend model. If our market trend model stays weak, as you've viewed on the trading view, as well as our trade station, great visual of understanding what's going on from market participants, buying versus selling, real time, 0DTE live. And if that continues to stay weak, then most likely we'll see some more weakness in selling in the overall market. All right, let's move on to our trading view chart. I already uploaded the 0DT transition. This is full expiry script. We have a 0DT script as well, but we continue to shop around the transition area this morning. So the full expiry, 67.85, 0 gex and in trans. 0DT transition confluence. So again, if we see a rejection around this level, out of the money put speculation come in, weakening market trend model, we would anticipate a move back down towards 67.50 or in the middle of the drunken sailor range. If we capture these transition areas as well as the bottom of drunken sailor range, 6,800 would be that first stop overhead, but we'd look for stalling and failing into that 6,800 also. If we capture 6,800, then we have an opportunity to move up towards 68.20, and then 68.50 is where that next highest sensitivity level is for in the money puts overhead. So thanks everybody for joining us. GameEdge.us. Check us out. Significant education with our newsletters. Put your email in. You'll be delivered beyond the bell on the weekends. Goes over our strategies, our tools, how we navigate the option structure, and how we help new members get up to speed rapidly. And then check out our Game Edge Fast Pass, our free course. Again, all the education about anything that you will be able to use, our tools within our overall Discord. And then our blog, it really does have all of the articles we've been posting, matching our X posts and how we look at option structure and the tools we use to be on the right side of the trades, as well as the overall market intraday. So again, thanks everybody for joining us. Let me know if you have any questions. You want to go over any individual tickers. I'll hang out for just a couple more minutes as we're roughly 10 minutes before the open. I'd like to hang out for 2 or 3 minutes if anybody wants to go over individual tickers or has any questions of how we navigate the option structure. I know we covered a lot of content this morning. I tried to fly through it so we could get everything in. You can go back and watch this. This will be posted on X as well as YouTube. Again, like and subscribe, and you'll be notified when we go live with content. Thank you for all the new members or new likes and follows on X. We continue to grow. Our Discord continues to explode with new members coming in, using our tools, getting up to speed. Again, our Game Edge team is in the Discord trading with everyone. We are real traders using real money and helping everyone navigate the options structure as well as individual equities every day. So NVIDIA, yep, let's look at NVIDIA. So call dominated, above and below spot price still. With this expiry, we're call dominated. 180 overhead continues to be that highest peak sensitivity and speculation area. We're within the overall transition though, and you see 175 right there, negative net delta. Not a significant amount of charm though. But that would be an area I'd look to get over. If we get over 175, then it looks like we have a runway towards 180. And then after this expiry, 180 overhead looks like that's probably where your cap on price is going to be. All right, let's check out Tesla. Yeah, Tesla, we hit that. We did hit 500. Yes, I don't know if we hit right up to over 500, but that continues to be that high sensitivity peak speculation point that market participants are speculating. Call dominated, above and below spot price. Should still be supportive on pullbacks. We're above transition. Everything still looks good on Tesla for upside movement. Again, as long as the market cooperates, 75% of stocks follow the overall market. So if the overall market continues to move up, I would anticipate Tesla continue to appreciate. You actually see PGX move up to 510. And then into January, it actually drops some there. So, but 500 still looks like that upside speculation sensitivity level for Tesla. 500 and then obviously 510. But we're above transition 2, which is bullish. So you see the individual strikes there that people are speculating at 490 and then 495 and then 500. So, all right, let's check out the chart pre-market here again. All right, we just continue to chop around this transition level. So again, 67, 80 to 85 is really going to be important at the open. Everybody watch those levels for failure, rejection, or recovery. And then the top of DS, 67.90. And then above that, 6,800. We've had a significant move pre-market. Actually, we're 67.20 at the close. So we've moved almost 60 points from the close and then pre-market. Again, this is still going to be extremely choppy range within Drunken Sailor. So make sure everybody understands that, even though we've had price appreciation pre-market, if we start dropping back into Drunken Sailor range as well as this very wide transition area, 67.50 to 67.80, it can be extremely choppy. So make sure you're managing risk. All right. Thanks, everybody. Everybody have a great day. We'll check in throughout the day, manage risk as always, like and subscribe on X and YouTube, and we'll see you later.